let's go ahead and jump in. So we've talked about this chart many times throughout the years. The general idea is sort of measuring the return of Bitcoin from the low from the bear market year, right? So it's kind of hard to do it for the first, for cycle one and cycle two. And honestly, you could come up with a good reason to just combine one and two into a single cycle. But if we just exclude those and just look at the ROI off of the low from 2014, the ROI off the low from 2018, and the ROI off the low from 2022, you get a chart that looks like this. And remarkably, despite how different the paths have been to get to where we are today in all three cycles, the ROI from that low from the bear market year has actually been the same, more or less, in all three of them. You can see, in fact, that in the third cycle, which is the cycle that I'm sort of referencing starting at the end of 2014 from that low, you can see that at this time in the cycle, the orange line, the ROI from that low was about 2.45x. Whereas the ROI from the low in 2018 at this time was at about 2.88x. And in the current cycle, the ROI from where we were back in sort of mid-November of 2022, the ROI has been about 2.75x. So right now, the ROI is actually closer to the last cycle from that low than the cycle before. And the path that those two cycles took from where they were at this point, you can see we're currently on day 413. Those two cycles took completely different paths over the next few months, right? I mean, while they ended up being pretty similar, 200 days later, so let's say by Q3 Q3 of the halving year, while they basically ended up being the same Q3 of the halving year, you can see that the path to getting there was very, very different. And in fact, by day 567, the ROI was more or less not that different from where they were at this point in the cycle. So basically thinking about another, 6 months going by, and 5 to 6 months going by, and the price not really being that different. But again, the path to getting to that point out in, say, Q3 of the halving year was very very different from if you look at just the last two cycles. And one of those cycles, right? One of those cycles, what happened after this point? This is, just to overlay the current cycle. You can see that one of those cycles, the price of Bitcoin basically just went sideways for several months, in fact, and didn't do anything substantial until about day 500. Again, we're currently on day 413, so that would correspond to another 80 days of relatively boring price action for Bitcoin. But on the other hand, if you look at the last cycle, which was cycle 4, which is actually where the ROI is closer to today, you can see that it actually pressed higher into about day 427, so around the 427, 430 mark, which is another 2 weeks out, right? So if we take 14 days from the current day, that puts you out on day 427, which is exactly 2 weeks from today, right? Coincidentally, that's also theoretically around when there might be some type of resolution on the spot ETF stuff for Bitcoin, about 2 weeks from now, right? Sometime in early to early mid-January, based on what people are saying on Twitter. Not that I have any idea as to the outcome of it or exactly when it'll happen, but the prevailing sentiment, I think, from a lot of people that I think have a better handle on it than I do, sometime, first, second week of January, perhaps the second week of January, which coincidentally is about 2 weeks from today. So it'd be interesting to keep an eye on because, 2 cycles ago from this point, Bitcoin basically just went sideways. But last cycle, it didn't really just go sideways at this point. It actually continued to go up until the ROI was over 3x, right? Meaning we sort of had gotten ahead of ourselves because the cycle before that didn't really reach a 3x move until several months later, right? Day 500, which is still 3 months out. And that aggressive move to the upside, of course, we had the pandemic, and we saw a pretty aggressive move back to the downside where the ROI from the low was only about 49% up. It was actually less than that if you include daily closes. We know if you include daily closes, it got much closer to the low, but in this chart, we're only concerned about daily closes. So I just wanted to sort of bring this chart up and to show you that in general, markets love climbing the wall of worry, right? They do. I think it's important to discuss the risks, and yes, there's always going to be a lot of things to be worried about, especially in the macro. And if a recession comes in 2024, then we could have something similar to what happened last cycle. But if it is, it's probably going to play out in a very different way, right? In a very different way than it did last cycle, because none of these things, whenever we've looked at prior charts and looked at fractals and whatnot, it never plays out the exact same way, right? The charts never play out in the exact same manner. So you can look at the paths, the last two paths that the market took, and be somewhat confident that it will not follow either of those paths to the T, right? We also can look at this chart and say, well, generally speaking, from one cycle to another, we have experienced diminishing returns. This is not a popular view, and it wasn't a popular view last cycle. And I understand that a lot of people will say that it'll break at some point. And the truth is, at some point, it probably will, right? It's not going to just be this easy. But diminishing returns is one of the views that last cycle we said was the reason for Bitcoin being unable to go to 300K. And the reason for that was in order to go to 300K, Bitcoin's ROI from the bottom would essentially have to be the same as it had been for the prior cycle. And history shows us that that was unlikely to happen. Okay. And so last cycle from the bottom, you can see that Bitcoin only went up about 20x or so, maybe a little bit more if you include daily wicks and whatnot. And so we're already Bitcoin is at about 2.75, right? 2.8, something like that. 2.75x off the low. So you can see that even in the last two cycles, if we were to sort of just get rid of these really quick, even by day 600, the ROI off the low was about 3.5x in both cases, right? So this is day 630. Again, we're only on day 400, a little over 400 right now. That is, 2/3 of a year. Wait, you're talking about the latter part of the halving year, and the path to getting to that should be quite interesting one, because we still, of course, have many things to get resolved, likely sometime between now and then, including yield curve resolution, the uninversion of the yield curve, theoretically rate cuts by the Federal Reserve. Do they cut quickly enough to sort of hit a soft landing, or do they cut too slowly and a hard landing? And a hard landing is the outcome. So there's those events, and I imagine we need to get through those events at some point here over the next, let's call it 6, 7, 8 months. And the path that Bitcoin will take will very much be dependent on, in my opinion anyways, the way that the macro shapes up over that time period, whether the unemployment rate goes up or whether inflation just slowly goes down without the unemployment rate going too much higher. I do think those will play a role. But anyways, I just wanted to show the market cycle ROI, show where we currently are, what happened in the last couple of cycles, and hopefully you can look at these sort of charts and get a better understanding of the bigger picture of the cryptoverse, understanding the risks that are involved if something were to happen in terms of monetary policy, but also not missing the forest for the trees. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up.